Investors didn't really change their behavior going in to this whole 11th hour deal, Johanna. So what do you think they're going to do now that it's about to be passed? What's the aftermath going to look like for the markets?
Well, my perception is people didn't change their behavior dramatically, but I think people held back a little bit in taking on risk risk because there was always this potential for something unexpected to happen. And I think now that we get some resolution, I mean, inevitably this will be positive for risk assets. And, certainly in my region and in EM, I think this should have some support for EM, including EM equities. And, I'm hoping for a bit more rally towards the year end.
What about fixed income?
Fixed income, I think, obviously, I think some of the higher yielder plays that had been hurt a lot by the taper-led volatility in the last couple of months, we've seen a bit of rally, but I think we could still see a little bit of rally to go towards year-end, especially since, there's a chance now the timetable for taper has been delayed. So I think, looking at markets, looking, for example, at Indonesia, looking at, in terms of the dollar debt, looking at some of the higher-yielding quasi-sovereigns in Asia, I think there's a little bit more room for a bit more rally. Yesterday we put out a note saying, some of this quasi-sovereign out of Sri Lanka, like National Savings Bank bonds, could rally a little bit given the high spread. And I think those type of looking for value, higher yielding assets that have lagged, I think could have a little bit more of a squeeze to go towards the end of the year.
Johanna, you make a very important point because the deficit countries in this region are still having to struggle with a lot of major structural problems. There are politics as well. We've got elections in Indonesia and India. So would you divide up the emerging markets between those that are more developed and those that are developing or specifically have deficit issues that they have to deal with?
Well, I think on the growth front, when we look at our allocation and how we view equities, for example, we have liked a little bit of more the developed markets that can benefit from the cyclical upswing in the U.S. Because eventually we do expect the taper will happen, and if the temporary damage in the U.S. is going to bounce back early next year, then we should have a little bit more momentum for some of the cyclicals. Now, for India and Indonesia, obviously these countries were badly hit during the taper-led volatility. I think on the positive side, I do think that these two countries have made some policy adjustments. They're trying to narrow their current account deficit, so I don't expect as big of a volatility. And to the extent that some of the yields in some of these markets have lagged, especially, for example, Indonesia, we could still see a little bit more of movement. Maybe on equities, we're probably, our equity strategists are less positive on those equity markets because growth will probably remain difficult. But as a yield play, again, in an environment where we're looking for yield, they might benefit at the margin.